So the conflict in the Middle East causing a great deal of concern over oil supply, with OPEC ministers debating over whether or not they should increase output to ease prices. Well, right now, oil is back around $105, as you can see there, reaching a new 29-month high at near $107 as well. So, and you can see Brent crude up $115. So the question is whether or not investors overreacted to the Libyan supply disruption. Well, Simon Wardell says that may be the case. IHS Global Insight's oil director says underlying market conditions should support prices at around $100 a barrel. He joins me now. Simon, good to talk to you. Thanks very much for speaking to us. So tell me a little bit more about your forecast. You're saying there has been an overreaction, exaggeration in the market about when it comes to supply concerns?
Well, I think what's happening is everyone's pricing in geopolitical risk at the moment. If we just look at the supply-demand fundamentals, we don't really have a shortage of oil out there. The Saudis and now some other OPEC countries are covering the lost Libyan output, and there's still more to come if needed. So we don't really have the same sort of situation we did when we had the 150 in 2008. So it looks like prices are a bit higher than they should be on that basis. Having said that, there's obviously a huge amount of uncertainty over what happens in the Gulf. And if there is a supply disruption, then obviously we could see prices go much higher. And that's what the market's doing, pricing that in. But if that doesn't come to pass, we could see things drop back quite quickly.
So you're saying that there isn't really... What about the state of supplies right now? Because according to the International Energy Agency, Libya is down, what, 1 million barrels of oil a day. It seems as though the situation, it might be a slow burn that is slowly developing into a full-blown civil war, so crude exports could be disrupted for quite some time. Let's just say, for the sake of argument, we take all Libyan oil out of the equation. Do you see a significant supply disruption to the price of oil then?
Well, I mean, I think the market's priced that in, at least for a number of weeks, if not months. And we saw yesterday that on some rumors that there might be some end to this conflict, some talk of Gaddafi seeking to leave the country, not confirmed, of course, we saw prices pull back. So I think a lot of that supply disruption is priced in. And it's possible that this situation could end much more quickly. And in that case, we could see prices pull back. But again, it looks like it's going to be a fairly lengthy supply disruption. But again, I don't think that there's a shortage of oil to cover that at the moment in global markets.
So where is all this concern coming from then, that people are saying that Saudi Arabia isn't at full capacity, other OPEC members could easily make up for the shortfall in Libya, and yet many people are saying actually, you know, Saudi Arabia, even if it was to make up for the shortfall, the crude is not of quite the same quality or nature. So
yeah, there are some quality issues. Libyan crude is particularly light, and it's used for Southern European refiners in particular. It's difficult to swap exactly the same quality, but refiners have some ability to make changes to the way that they run their plants and adapt to the type of crude that's coming in. It's not ideal for a lot of them who are used to getting Libyan crude, but they can adapt, and I think that they will do, obviously, when we see product price margins widen to allow for that to take place.
And, you know, Simon, I guess a lot of the concern is coming from the fact that it isn't just about Libya. You know, Bahrain, Oman, the Gulf, Saudi Arabia could now be affected. There's calls for a day of rage there on Friday. The east of the country, where a lot of that oil is concentrated, you have a very disenfranchised, disadvantaged Shia population. So what happens to oil prices if the unrest spreads to Saudi Arabia?
Well, that's where the risk is being priced in right now, and that's what markets are very, very worried about. Saudi Arabia, a slightly different case from North Africa, but nonetheless, we are seeing the stirrings of some protests there. It's hard to know what happens next, but if we do see some significant protests, then we will obviously see prices rise higher. At this stage, it's very difficult to speculate on what sort of number we could get to. It will depend entirely on how the situation develops, how serious the disruption looks, and the demonstrations are.
Simon, just very, very briefly, what sort of number could we get to in the next few months or the next few weeks, even, what, 120, above that?
Oh, yeah, I think so. But I think we'd start to need a disruption to see those sorts of prices. We really do need to see that kind of outage take place. I think a lot of the risk is being priced in as we speak.
All right, Simon Wardell, Director of Global Oil, IHS Global Insight, thank you.